than just business news, we're news for business people.
Good morning, you're watching Daybreak on Bloomberg Quint Live. I'm Alex Matthew. Here are the headlines. Asian markets open on a mixed note with the Nikkei trading flat. Stress in the Indian banking sector remains high, but it is close to bottoming out. That's according to the RBI's latest financial stability report. India went against US President Donald Trump on his Jerusalem decision, voted in favor of a United Nations resolution calling for the United Nations to drop the recognition of the city as Israel's capital. Let's move to international markets now. And US stocks finished higher on Thursday. The Dow and S&P 500 closed just below record highs set earlier during the week. Bloomberg's Abigail Doolittle wraps up all that's happened in the US market.
Stocks finished higher in Thursday's Wall Street session. The Dow, the S&P 500, and the Nasdaq finished fractionally to slightly higher with the tax reform bill passed. That seems to be a bullish tailwind, but a small one in Thursday's Wall Street session. Now, relative to the S&P 500, 6 of the 11 sectors were higher. Energy up top, up more than 2%. And this did not reflect big gains in oil. Oil was higher at the end of the day, but just slightly rather bullish activity from Wall Street analysts. Lots of upgrades and price targets being raised and constructive commentary in the likes of Anadarko Petroleum, ExxonMobil, Chevron, among many other names. A piece of this could be the fact that energy is one of only 2 down sectors in the S&P 500 this year. Sometimes in the following year, those sectors catch up and turn out to be the top sectors in the following year. It'll be interesting to see whether or not that comes to play, but right now lots of bullish commentary on the energy sector from Wall Street analysts. And then lots of big news around a very small company, Long Island Iced Tea. The stock finished higher by 187% on the news that they are changing their name to Long Blockchain and at some point somehow getting into the crypto and blockchain space. We're seeing a lot of that today on the crypto mania, but also on the day, Bitcoin down about 5%. In fact, over the last 3 days, at one point going into a mini bear market. Lots of volatility for Bitcoin and the other cryptocurrencies and overall the crypto blockchain space. In New York, Abigail Doolittle, Bloomberg News.
Now, in the headlines, we told you about the UN vote against the US president's decision to recognize Jerusalem as the capital of Israel. Now, when we're talking about the vote, most countries that voted in favor of the US moving away from its decision. US President Donald Trump, in response to the vote, said that the countries that voted against the US, and I quote, they take hundreds of millions of dollars and even billions of dollars, and then they vote against us. Well, we're watching those votes. Let them vote against us. Now, that's exactly the point that we're taking from that, and it seems to be echoing what the US representative at the UN had said earlier in the day. But let's move on to the Asian markets now and see where they are at. They opened mixed with the Nikkei trading flat and flitting between gains and losses. The Nikkei seems to have gained some ground. It's now trading as much as 0.09 or 0.1% higher. The Australian and South Korean benchmarks are trading in the green. Let's move to the Indian markets now, and Darshan Mehta and Agam Vakil are here to set us up for the day's trade and all that's happened in the futures and options space. Morning, guys. Darshan, first to you. What's on your list today?
Good morning, Alex. At this point of time, it looks rather muted. Across the globe, activity seems to be rather muted because of holidays. So the SX Nifty also not indicating much of an uptick. It's just up 7 points, but luckily it's come down. It's come up from the lows of the day. As far as ADRs are concerned, most of the ADRs ended with a positive bias. Vedanta, Infosys. So Vedanta, the strong run continues. Infosys has been doing well. Not the best of days for Wipro. It was down almost 0.9%. ICICI was up almost 0.4%. As far as the other setup is concerned, let's talk about crude. It's actually down after 3 days of rally. It was down in trade yesterday, but it's down in trade in morning trade. But overnight it was up almost 0.5%. The other factors that you have to watch is that for the first time since November, we will have a weekly gain as far as crude is concerned. So this week's been pretty decent for crude itself. The other factors is the fact that the US crude inventories have fallen to the lowest level since October 2015, and that is aiding a lot of the crude prices staying where they are. So that's the word that's in there for crude. Now, mixed flows by base metals on the LME. Some of them did well, some of them didn't. So let's take a look at which did well. Aluminium and zinc were up almost 1.2% to 0.2%. Copper, nickel were also up in trade. The two commodities which were down in trade were lead as well as tin. So these are the counters that were down in trade. Even in China, the commodity basket is pretty strong. Look at steel. Steel is up over 2%. So that's a strong rally that's coming in. The other base metals are flat in trade. So copper is flat in. It's almost 0.5% up. Aluminum is up 0.3%, but rubber is down almost 2.4%. So that is something that you have to watch out for some of the tire companies here. Gold trades at lower after 2 days of rally. Now, as far as fund flows were concerned, FIs are net sellers to the tune of 384 crores in the cash market. DIIs were net buyers to the tune of almost 1,600 crores in the cash market. So there is substantial DII activity that is happening. In terms of the month-to-date data, FIs are massive sellers. They've sold in almost 5,300 crores in the cash market, but most of that has been absorbed by DIs because they bought in almost 7,700 crores in the cash market. Now, for the Nifty itself, it trades lower for the second session. It was down marginally, but yet, nevertheless, a lower session for Nifty itself. The benchmark were flat in trade, but the broader markets did extremely well. Look at the rally that came in the BSE mid cap and the BSE small cap, up close to 1% each. The big drag that happened yesterday was the Nifty Auto, and it had a stellar run the day before. So Nifty Auto saw a little bit of selling. Now the Nifty was down 3%. What contributed? L&T was one of the top performers in trade because of the capex cycle reviving, with Tata Steel indicating there is a lot of traction. HDFC, Infosys, HCL Tech. So a lot of IT made its move. What didn't do well? Reliance, Maruti, M&M. So auto name feature among it, and Reliance has been seeing a little bit of weakness over the past few days. So that's the general trade setup. Agam, what's the FNOQs like?
Well, consolidation continues. Nifty continues to hover around 10,400. Still elusive when it comes to the mark of 10,500. But when it comes to your futures, again, more unwinding coming along. Let's also take a look at what's happened in the Nifty Bank futures as well. So you can see very little change, and it's the underlying and near 4% unwinding in this futures as well. But moving on, the VIX, of course, has fallen further, inching towards the mark of 12. Nothing much has changed there. And speaking of the changes in open interest in today's day of trade, what we've seen is a little more writing in the 10,400 and the 10,600 calls, and a lot more unwinding in the 10,300, 400 and 500 puts. For that matter, quite some activity in the 10,200 put as well, as you can see here. But in terms of new stocks which are in the F&O band, we have quite a few actually. So you can see Diwan Housing, GMR, as well as IFCI, and other than that, this is a pretty long list. So we have the likes of Reliance Communication and Walkhart as well. Do remember we are in expiry week, so we will be seeing a lot of changes in and out. But that said, Motherson Sumi is one stock which has declined by as much as nearly 3% yesterday. We saw fresh shorts with open interest surging by as much as 22%. So it remains to be seen whether or not we do see recovery there or perhaps sustained weakness.
Thanks for that, Agam. Let's move on now to the other markets that we're talking about, which is, of course, the rupee and the bond market. Saloni Dhanuka is here with all the details in those two markets. Morning, Saloni.
Good morning, Alex. So the rupee yesterday ended marginally higher at 64.06 levels against the dollar. Now, heavy selling by foreign investors as well as global funds in the local equity market largely pressurized the rupee. The Indian unit traded in a narrow range of 13 paise before settling positively. Overall, foreign exchange market sentiments remained largely dull in the absence of any major triggers, and as the currency traders prefer to stay on the sidelines and avoid taking any long positions ahead of the Christmas holidays. Now, on the global front, dollar snaps 4-day losing streak as it now trades 0.2% higher at 93.50 levels in the early Asian trade. Now, this move was largely supported by US GDP data, which indicated that US economy grew at 3.2%, its fastest pace in more than 2 years, while euro was modestly higher against the dollar after having gained around 1% 1% so far this week. It was largely supported by rise in German bond yields. Elsewhere, as expected, Bank of Japan keeps their policy rates unchanged while they reinforce the expectations that Bank of Japan is in no hurry to move away from its ultra-loose monetary policy. Coming back home, dollar rupee is trading flat in the non-deliverable forward market. While moving on to bond market, sovereign bonds reversed losses while benchmark 10-year yields ended steady at 7.21%. Now do remember that the yields touched an intraday high of 7.29% after the release of hawkish RBI monetary policy minutes. And also global funds reduced their Indian debt holdings yesterday. They reduced their debt portfolio by approximately 280 crore according to NSDL data, Alex.
Thanks, Saloni. Going straight to the commodities market now, and Jayesh Khilani has all the updates there. Jayesh, morning.
Morning, Alex. Let me start off with crude oil prices, which are trading soft in Asian morning hours. But this is on the back of a 3-day rally that we have seen for both versions of oil, that is Brent and WTI. As far as news is concerned, we are given to understand that the North Sea pipeline will actually start, resuming their operations going into next month. So that's the positive coming in for oil prices. Moving on to the base metal space, the LME base metal index closed higher for the 7th consecutive session and reached the highest level since November the 6th. Copper has actually slipped from its 2-month high after it was downgraded by National Australian Bank, and they say that there could be some pullback as far as copper prices are concerned because it has rallied the most amongst all of the base metals this year. Amongst the other individual names, aluminium was the best performer on the London Metal Exchange. It was up more than 2%, while lead was down to the tune of 0.8%. Zinc and nickel actually ended positive, but mildly positive. That is, now base metals in Shanghai are trading with a mixed bias, with steel leading the entire pack, which is up more than 2%. Moving on to the precious metal space, gold futures are actually trading soft after 2 days of decline. So we've seen COMEX gold just decline a tad bit to 1265 levels, and silver prices are actually trading down for 2 days in a row now.
Thanks for that, Jayesh. Let's move on now to the big story of last evening and, in fact, all of yesterday. Lack of evidence. That was the basis on which the special CBI court acquitted all the accused in the 2G spectrum allocation case. The trial in the case began 6 years ago and involved many high-profile names. The allegations of bribery and corruption in the 2008 spectrum allocation process was also a big factor contributing to the downfall of the Congress-led coalition in 2014. Let's first hear what Kanimori and A. Raja had to say after the court cleared their names.
Yes, my grievance is ventilated.
Yes. Do you feel vindicated after today?
Yes, of course.
And do you think
So from day one I told the entire charge is honest.
And I love to thank everybody who stood by me, my family, my husband, my party, the leaders, across the party who understood Charlie.
Now, soon after the 2G verdict was announced, Congress and DMK claimed that the allegations of corruption in the case were untrue. Former Prime Minister Manmohan Singh said that the verdict vindicated the then UPA government and put the false propaganda to rest. But the BJP hit back sharply. Finance Minister Arun Jaitley claimed that the Congress is using the verdict as a badge of honor. Here's a quick snapshot of all the top political reactions on this case.
Judge Saini's judgment is a very bad judgment, and it has to be appealed. And such things happen in courts of law. That's why we have 3 tiers of courts.
The court's judgment has to be respected, and I'm glad that the court has pronounced unambiguously that all this massive propaganda which was being done against the UPA was without any foundation.
कोई करप्शन नहीं, कोई लॉस नहीं, और अगर स्कैम है तो झूठ का स्कैम है, विपक्ष के झूठ का और विनोद राय के झूठ का, और विनोद राय को आज देश के सामने माफी मांगनी चाहिए. The Congress party leaders are treating this judgment as some kind of a badge of honor and a certification that the 2G allocation policy was an honest policy.
Now, the Indian banking system's NPA pain may be bottoming out. That's not to suggest, however, that the pain will go away in a hurry or that there won't be a small spike over the next few quarters. The biannual financial stability report released by the RBI pegs the total amount of gross non-performing assets at 11.1% of all loans by September of next year. It's the large borrowers who saw the maximum spike in bad loans over the course of the last few months. The report also highlights a marginal recovery in corporate lending, though still in a nascent stage, while laying the emphasis on global growth recovery. Moving on now, Reliance Infrastructure has signed a definitive binding agreement with Adani Transmission to sell its Mumbai power business. The deal is valued at around 13,250 crore rupees. Reliance Infrastructure will use the entire proceeds to pay off debt. Post the deal, it will be debt-free. Jayesh Khilani joins us now to break down the deal and to tell you everything that he's picked up about it. Jayesh, what do you have for us?
Alex, let's break this down into three parts. The first one is what is the deal about and what is the consideration that they are going to get. So the total deal value that they've given us is 13,251 crores. Along with this, Adani Transmission will also get regulatory assets under approval which stand to the tune of 5,000 crores and a net capital of working capital of about 550 crores. So putting all of these three together, you get a total consideration of about 18,800 crores. What Adani Transmission is going to get from our infra for the Mumbai business is the entire generation, transmission and distribution business. So that's as far as the deal is concerned. What will happen post the deal is that our infra is most likely to become debt free with a 3,000 crore cash surplus. Now how this happens is that as of September 2017, the debt on books is close to 23,200 or 300 crores and the standalone business has about 10,000 odd crores of debt. So with this 13,250 crore infusion, it is likely that our infra is going to be debt free and they will actually have a cash surplus of about 3,000 crores, which will enable them to focus on the asset light EPC and the defense business going ahead. Now if you look at the stock prices, this was originally announced on 10th of October. From that point of time, if you look at the stock prices, it clearly shows that Adani Transmission has gained about 16-17% and our infra just about 5 to 6%.
Thanks so much for that, Jayesh. Let's see what Lalit Jain, the CEO of Reliance Infrastructure, had to say about the deal. Listen in.
Our integrated Bombay business, which consists of our Bombay distribution, our related transmission, and the Dahanu generation, is being sold to Adani Transmission for a total deal value of 13,251. Then there are regulatory assets which are at various levels of approval, totaling to 5,000 crores. That as and when they get approved, they will flow to our infra. We don't need any money for capital expenditure. So this is our future growth triggers will be the EPC and the defense business.
The move to electric vehicles has got most automakers in the country scrambling to put technology in place. The industry body SIAM has set the timeline for total electrification between 2030 to 2047. Krishanu Mukherjee tells us how automakers are looking at the transition to electric vehicles in this report.
SIAM has submitted a white paper to the government on the move to electric vehicles, but in that has actually pushed the timeline from the 2030 aim or the target that the government already has to a more achievable 2047, which is 30 years from now. Now SIAM says, or actually the auto industry says, that a move to 100% electrification by 2030 is going to be a tad too tough, and hence the aim should be to reach 40% electrification by 2030 and 100% by 2047. What it is also asked in that white paper is that till then, over the next 10 years, that is, the government needs to support internal combustion engines, which ministers of the government have gone on record to say several times that they wouldn't, that by 2030, the automakers that don't move to electric vehicles may be even bulldozed. So SIAM has said that internal combustion engines need to be supported till then in order to progress to electrification in a staggered way, in a staggered transition, maybe first hybrids and then electric vehicles eventually. Now, we spoke to the chairman of Maruti Suzuki, Mr. R.C. Bhargav, who also echoed this viewpoint and said that over the next 10 years, investments into internal combustion engines will have to go on, considering there is no other way out. And acceptance of electric vehicles across India, because India is a small car market, to get a small electric car at a price competing with the current internal combustion engine is going to take a while, and acceptance in terms of getting infrastructure ready in other areas is also going to take a while. So internal combustion engines need to be the focus for the coming 10 years, along with electric vehicles also being pushed. So what Maruti forecast is by 2030, out of about 70 million sales till then, about 14.4 million sales, only 14.4 million are going to be electric vehicles, but the rest, the sizable chunk, is going to be internal combustion engines, and that should be the roadmap going ahead.
Now, India's largest car maker, Maruti Suzuki, doesn't expect the government's electric vehicle push to result in a slowdown in investments into fossil fuel-powered engines for at least another decade. The company doesn't yet have an electric variant. Bloomberg Quint's Krishanu Mukherjee spoke to the company's chairman, R.C. Bhargav. Here's a snippet of that conversation.
We have to provide the inputs to Toyota and Suzuki to ensure that the products they make are actually acceptable to the Indian consumers, both in terms of price and performance. So all of that is our role. In the production, maybe we'll produce, maybe Suzuki plant in Gujarat will produce or something. That's not decided at all but that's irrelevant where they are produced.
Right. What sort of a challenge is it going to be for the Suzuki-Toyota joint venture, or even for Maruti Suzuki, to maybe get a small car electrified? How is that a challenge, and how tough is that going to be?
See, the situation today is if it's a large car with a higher price value, right, the benefit you get from GST reduction in quantitative terms is very much higher than what you get on a small car. Sure. But the cost of making electric car is not very different between a small car and a large car. So the challenge for a small car becomes much higher than for a big car, because there you can set off a lot of the cost because of the GST benefits. Right. So for making small cars affordable, it's a much more difficult proposition. And government and industry will jointly have to look at how to make small cars affordable.
Speaking about the government intervention, would you say that there is required some sort of an intervention in terms of maybe policies, maybe subsidies?
They will be required. What is required, how much is required, I think we'll only know after much more information is available.
Now, Myntra has tied up with mom-and-pop stores to showcase and sell their products. The move is said to boost the online shopping giant's sales by about 25%. The company is also developing AI to access consumer demands and reduce delivery time. Bloomberg Quint's Nishant Sharma caught up with Anant Narayanan, the CEO of the company, to find out all about that.
So we started the Kirana initiative almost 7 months ago. We had about 800 Kiranas for the last URS. This time we'll have 3,600. So dramatically higher. And the reason it's helpful is it actually provides us the capacity that we need, the spike in capacity that we need right after this, right? Right after URS. Also, just given the timing, we're trying to get a majority of the packages through before 1st of January, right? So that it hits people before New Year. So that's what we've done. We've also used a lot of technology this time and a lot of AI and machine learning to actually think about what will actually get sold. And can we actually start to forward deploy some of that even before it gets bought?
Right, and I've read somewhere in the news report that this works as a last mile delivery, enhancing the speed of products.
Right.
Are you also tying up with these Kiranas to also have an omni-channel presence as well, where customers can have a touch and feel?
So early days for that. I think those are still plans in progress. Right. So for now, I think it's just last mile delivery. We might do more with them, of course.
Right. And is it just only for the sale events, or it's going to be an integral part of?
It's going to be an integral part of what we do. I believe that it's actually better for consumer experience as well, because they're actually local. They know the area, they know the customer. So if we can create a sustainable business model for them, so that they actually make a bunch of money, it's also giving back at some level. If you think about it, we're creating, 3,600 micro entrepreneurs who are actually now running their own business. So yes, we want it to be an integral part of how we do
And
business.
how does the partnership work?
So they make money on the packages that they actually deliver. We make sure that there is enough cash flow that actually works through. We are actually among the most frequent payers in terms of how frequently we pay the Kirana stores. So, and that's all tech enabled, so that it's actually faster and can be done at scale.
Shraddha Babla joins us now with stocks in news. Shraddha, what are the stocks on your list today?
Morning, Alex. HDFC is the stock that we are going to keep an eye out for. News flow continues for that company. Now, in the latest, they have approved the sale of 100% stake in its two wholly owned subsidiaries, which are HDFC Developers and HDFC Realty. The sale is going to be to Quicker, and it's for a total consideration of 355 crores. In addition, HDFC will also pick up some equity stake in Quicker. The stake has not really been disclosed, so that's one name that we're tracking. We're also tracking Canara Bank, which has said they will sell 4% stake in its listed subsidiary Canfin Home. So post the stake sale, they will hold 26% out of the 30% that they earlier held. And again, they had board approvals in place to for this divestment. Aarti Industries, where they have said they will buy back 1% or 8.2 lakh shares at the price of 1,200 as compared to yesterday's closing price of 1,046. Keep an eye out for that name. Also, another interesting name, Navin Fluorine. They are going to spend 115 crores for expanding its capacity at Devas plant. You have Z Media, which has started TV news channels for UP and Uttarakhand. You also have a ET report which says that KT Corp and Bearing Asia are vying for Bank of Baroda's cards unit, and the sale of this unit could fetch Bank of Baroda a little over 1,200 crores. So these are some of the names that one should keep an eye out for.
Thanks, Shraddha. Moving on to the big brokerage calls of the day now, and Somit Sarkar has all of those details for you. Somit?
Good morning, Alex. On the big brokerages, first we have is IDFC Securities on Bharat Forge. Now, IDFC Securities hosted a call with the Vice President of FTR Associates, which is a leading North American CV industrial consultant and specializes in forecasting the Class 8 truck demand. Now, FTR is expecting a 20% year-on-year jump in the Class 8 trucks in calendar year 2018. Now, this strong Class 8 forecast for 2018 bodes well for Bharat Forge, as the company derives around 17% of its revenue from this. Now, rising freight, improving economy and mandatory electronic logging device from December 2017 are the reasons why FTR is expecting this surge in demand. Now, the brokerage remains positive on Bharat Forge given the multiple growth opportunities for the company going forward. Second we have is Motilal Oswal on Britannia. Now, they have maintained their buy rating on the stock but have raised the target price to 6,100 from 5,845. Now, continuous new launches in the low unit packet, that is LUP, will aid growth for the company going forward. Now, the company is also launching the Karam biscuits in LUP, which should help the company to penetrate well in the rural market and drive incremental volume growth going forward. Now, LUPs will aid ramp up in sales without diluting margins, according to Motilal Oswal. Also, lower unit packs will play a big role for the company going forward. Now, also the company has seen a rapid growth in its distribution. In the last 3 years, the company has doubled its distribution reach. Now, along with this, the company is also growing presence and increasing its market share in weak states like Rajasthan, Gujarat, Uttar Pradesh and Madhya Pradesh.
Thanks, Amit. Let's take a look at a few stories that you should consider reading on the website bloombergquint.com. First up, wind power tariffs fell to their lowest and below the cheapest solar tariffs in the fourth round of auctions. State-run Gujarat Urja Vikas Nigam auctioned 500 megawatts of grid-connected projects at as low as 2.43 rupees a unit. That's lower than the lowest solar power tariffs of rupees 2.44 a unit that was discovered in May, and 8% lower than wind-powered prices discovered in earlier national auctions in October. Facebook has signed a multi-year licensing deal that lets the social network carry songs and artists from the world's biggest record label, Universal Music Group. That's across its platforms. The competition with YouTube is likely to heat up there. That's all we have for you on this edition of Daybreak. All you need to know is up next. Do stay tuned. This is Bloomberg Quint.